Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD for Monday. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So it is a 4-hour chart of gold USD in front of us, and right now gold is trading at 1807. This is the current market price of gold here, and as we all know that Monday mornings are usually dull, Monday mornings are usually stagnant, and we can see a stagnant market right now. So we have got some few levels, but right now we do not see much volatility in the market. Okay, so if you have any ongoing position right now, you can continue with the ongoing position. But my dear friends, we can see that overall trend of the market is still towards the downside. We cannot deny the fact that market is constantly forming lower lows in the market, unable to cross the previous highs, which signify the presence of sellers in the market, the dominance of sellers in the market. And right now market is approaching the psychological support of 1800 level. So if the present situation continues where there is not much volatility in the market, okay, you may see some kind of bounce from 1800 level. Or in simple words, if after a couple of hours before the US session, because US session the market gets volatile, before the US session, okay, if you see market coming down to 1800 level, you may see some sort of bounce and you can take a buy position if market bounces. But keep in mind that we are not sure about the bounce, and market has been constantly breaking the previous lows, and 1800 is also a low and just the psychological support. Okay, as a result there is a high risk also. So if market bounces from 1800 level, or if you see any kind of price rejection from below at 1800 level, you can go for a buy position, but try to exit quickly after 20, 30 or 40 pips. Do not wait for a trend reversal. It can be risky, especially if you're a new trader, beginner. Please exit once you get the target of 30, 40 pips, because market is constantly breaking the previous lows. Market is forming lower lows, and things are not very positive for buyers in this market right now. Buying can be very risky. Okay, and the strongest support, yes, the strongest support on the chart of gold is at 1780 right now. So if market comes down to 1780 level, if by the end of the day or during the US session, if we see heavy selling in the market, we can expect the market to bounce from 1780 level. But before 1780 level, there are some smaller or minor support also around 1795, 1794 level. But again, I'm saying in this present market condition where the sellers are dominating, okay, relying on levels like 1795, 1800 will be very risky. If you have the experience of the market, go for it. Otherwise, please be careful, and whatever you do, please follow proper risk management, because this is my analysis. I can be wrong as well. Okay, so please protect your hard-earned money, protect your capital, and protecting the capital is the first priority, or should be the first priority of any trader. So if market comes down to 1800 level and if market bounces, you can try to buy, but it can be risky because this is not a very strong level. The strongest level is only 1780 here as the support. If market bounces from 1780, then only you can go for buy. Okay, but in case market breaks the 1800 level, okay, then there may be some sort of minor bounce from 1795 level, but again these levels are not much reliable. Okay, see, you may not like the thing that I'm saying that levels are not reliable. See, market does not belong to anyone. Market kiska saga nahi hai. Okay, so you must understand when you should trade and when you should not trade. In this chart right now, the only reliable support where you can take a buy position is 1780 if market bounces. Okay. And on the other hand, if market goes up from here, then the strongest resistance or the most reliable resistance from where we can expect a reversal is around 1840. Why? Because 1840 we have, okay, we have the trend line acting as dynamic resistance. Then we have the 50 moving average. So trend line plus 50 moving average, and around the same level we also have the Fibonacci 23.6% retracement level. So if we combine all the factors, so in case there is a sudden up move in the market, we can expect that market will be reversing again from this seller zone around 1840. Okay, 1835, 1840 will be a very strong resistance for the market. If market reverses, we can take a sell position. Before the 1840 level, okay, we have another resistance around 1825 to 1830, but again this is not a very strong level for reversal. If you are someone who is looking for reliable levels, looking for safe entry on the chart of gold, then you can take a buy position at 1780 if market bounces, and you can go for a sell position at around 1840 if market reverses. These are the only two levels as of now looks reliable on the chart right now. Okay, apart from that, though we have got support at 1800 level, but it's not reliable. Okay, it's not at all reliable. If market bounces, then only okay you can hope for some sort of bounce. Okay, otherwise not at all. Okay, 1795 can be a small buy position in the market, but again not much reliable. Similarly, this is also not much reliable level. See, this is market, you must understand where to rely. Okay, a trader only trades when the opportunity is right. Okay, that is a harsh truth, harsh reality, you must understand it. Okay, hopefully you have understood. Bye bye, take care. Please subscribe to my channel if you're watching my videos for the first time. Bye bye.